Reaction to an Elon Musk appearance on Twitter Spaces. I don't know exactly what the occasion was. It was some sort of investor group that organized a Twitter Space, and Musk showed up and answered question and gave some interesting thoughts about how he thinks about Twitter, how he thinks about Tesla. This is a reaction podcast to that. The takeaway is that we're very disappointed with Elon Musk because he doesn't have control over what's going on in the Tesla business. No matter what he's saying, he's not on top of things. And that's not even based on the fact that he's not available physically, with Tesla. You just feel it. You can feel it in his comments. This is not the Elon Musk that we know. This is not the determined guy, the compulsory entrepreneur that just has to do whatever he has to do. This is something else, and quite frankly, it's a little bit scary for us investors. We're not at the point yet to part from our investment. We have reduced our position based on leverage, but this is definitely a serious situation. Not long ago, we've said that our cost of capital is Tesla, that we believe that anything we do financially always has to be calibrated relative to the growth potential of Tesla. And no matter what, this has been tied to Elon Musk. I mean, you can't untie that just fast. And this is already the conclusion, actually, of this whole episode, which is the question, okay, what is Tesla worth without Elon Musk? This is the Not Even Wrong podcast. It's December 23rd, 2022. This is Krim Telko. For the day, the fund is down roughly 30 basis points. The market is flat for the year. We are down 70.5%. The market's down 21%. We're underperforming by 49.5%. Reaction to a Twitter Spaces appearance by Elon Musk. He spoke about several things, and the takeaway that we get from there is that he just isn't behind the eight ball. You can tell a difference between a manager who attends meetings, who is in tune with the information flow, and a manager who drives action. He is always been, of course, the latter. Okay, he's always been the guy. I mean, Tesla has been him, driving him, and also some of the best people that Tesla produced: Drew Ballino, Andrew Karpathy, Zach Kirkhorn. I always felt like these top managers, that they were groomed by him, or at least they learned from him, or under him, or with him. I don't know what it is, but they all had this determined, or have this determined vision. And you trust them, you give them your money, you give them your wealth, you give them the future of your kids' college education fund. Like, you give it to them, let's go do it. What you're doing is good, and you're going to do it the right way. I don't get that feeling anymore from Elon Musk, unfortunately, because he's not behind the eight ball. He's involved with Twitter, and maybe he's doing good work with Twitter, but he's certainly not. He's not at a level where, for example, he is using the macro as an excuse to justify the bad performance of Tesla stock, and he's anticipating a deteriorating also business performance of Tesla stock. Tesla used to be not a macro stock, or as we call in retail, a weather stock. You don't blame the weather, you don't blame the macro. You try to circumvent, you try to adapt, you fight, you try to win every fight under every circumstance. You can tell me, look, this is what we're going to do, this is what we expect, and we might fail, but don't tell me that because of high interest rates people can't afford car loans. Like, then figure something out, reprice the car, lower the cost, maybe throw in a couple $1,000s per customer. Just say, look, we're going to lower the car, make it more affordable, because what the Fed is doing, while maybe the right thing, from a macro perspective, it's hurting our sales right now, and we want people to adopt the car. So this was like, there's things you can do. I mean, you're not a macro stock. Since when is Tesla a macro stock? Since when is Tesla, the interest rate is high, people can't afford car loans type stock? This is just one example. Another example is the conversation about, like, Warren Buffett buying stocks. I mean, since when is Warren Buffett a guide towards investing in companies like Tesla? I mean, if that's the case, we can go buy Caterpillar, or I don't know, dividend yielding stocks. Since when is the conversation in Tesla about real returns and stuff like that? What is that all about? Like, do I need David Tepper to tell me if I should invest in Tesla or not? I mean, there is a there's a reason why we're investing in this company. It's a disruptive company. It expects outsized returns because of fundamentally new concepts and engineering practices. It's not because David Tepper thinks that the relative real return of stocks and assets is favorable or something like that. Nothing against David Tepper, by the way, but he's just in a different business. I'm sorry, he's not in the disruption type investment business. He has different, horizons and interests and all that. So as investors in Tesla, we're just very disappointed. And the question now is, okay, what's going on with the company? And it's really difficult to find positive momentum here. For example, this whole, call it disappointing attitude of Musk, how is it reflecting on employees? Are employees going to be, excited or working in this company when the CEO is blaming the macro environment for shortcomings? Well, then what is a typical employee going to do? He's going to say, well, it's not my fault, it's the macro, and so on and so forth. Like, aren't we in a situation now, don't we run the risk that everybody's just going to use the macro and the whole thing is going to deteriorate? Now, technically, what's going on with the stock is that a lot of people like us are getting out, and value investors have to pick up the tab. And while these things happen, stocks usually lose a lot of value because there is no gradual change between growth investor and value investor. The growth investors, they pay, up to 10 times sales for a company that wants to grow 50%. And the value investors, they don't want to hear about that. They're saying, I don't know, this is a car company, add some tech, 2 times sales, maybe 3 times sales. That's it. I'm not paying more. I'm not paying a penny more than that for this type of company. And they don't care if the potential is, 40% or 30%. They just don't want to deal with the risk of this outsized growth. Now is you have this shift from one investor class to another, and the adjustment is obviously very painful. Then Musk talks about, Broadcom was down 97% during the dot-com bubble burst. Well, what is he saying? Is he saying that Tesla's going to be down that much? What are you saying? Why is he scaring investors? Why is he trying to calibrate himself as sort of, it's not my fault, this is just the environment? It's really, really, really disappointing. My partner said, yeah, it's like a kid that hasn't done his homework and now he's babbling around, the weather, or I missed the bus, or whatever. It's a bit like that. Look, the fundamental problem with Musk is that he's not involved with Tesla as much as he needs to be as a CEO. And what we need is a separation of Twitter and Tesla. We need also a job description of a CEO and somebody who actually does whatever the job description says. This is fundamentally what's going on. Now, having said all of this, where do we stand as investors? I yesterday spoke with one of our investors at Orange Capital Partners, and they asked me, of course, what are you doing? I mean, and they have the right to ask, and they should ask. And my answer is, here's what we expect. We expect another about 25% downside in the stock, and I'm going to explain why. And then we think that there is a good chance of a very sharp reversal of the stock market, not just Tesla, because we're going to have, carnage. We're going to have people blowing up, something along those lines happening. I think this is what most people are expecting now in the markets. I mean, hedge funds and people like that, which is, look, the Fed can't continue like this. And what's going to change the Fed stance is some sort of carnage in the market. So we have another 25% downside, which gets us to about $100 a share. And then we're looking at roughly 3 times sales for next year. This is still relatively elevated for a car stock, but it's good. It's good. You could conceive that people start stepping in, value buyers start stepping in. This is what Musk said yesterday. He said that probably Buffett will be buying stocks next year. What he's trying to say is that he thinks that we'll have carnage in the market and the value investors will step in and put a bottom on stocks. Now, that could happen, of course, at 100 or 80 bucks a share, or even 60 bucks a share. I don't know where that number is, but I think what what I'm sensing here is that fundamentally we're getting close to a level where value is there. This is not an expensive stock in a sense. You're paying for a lot of hot air. You're paying for growth potential, but the growth potential is real. I mean, we have, products that are compelling. We have massive savings in terms of gasoline expenses and insurance expenses. And then we have the potential for software that is adding to the potential that we could have actually in the next 5 years, roughly 50% compound growth. That's still possible. Maybe not next year, but over the next 5 years. That would be a 7.5x of this year, 80 billion. So we're looking at roughly 600 billion in sales. You put a, 2.5 times, that's 1.2, 1.3 trillion. That's a 4 to 5x in the stock, depending on where, how far down it goes. That's the situation that gives you a perspective of, okay, this is a good investment. Now, it might not be a great situation anymore, a la, well, there was this really inspiring leader who is driving the stock and the company. But we've had examples before. We had Steve Jobs who stepped down for health reasons. We had Satya Nadella coming in lieu of sort of the older crowd at Microsoft. Amazon is going through a transition right now. That stock's also doing pretty badly, so there's question marks there. Netflix is kind of going through a transition, even though Reed Hastings is co-CEO, Ted Sarandos is co-CEO. I mean, we have a co-CEO situation. We had a co-CEO situation at Whole Foods, where John Mackey kind of had to step down for various reasons, but still ran the show. There has been, and most of these situations ended up okay. They weren't as good as maybe in the beginning you thought they might be. I mean, Whole Foods sold to $50 or something like per share to Amazon, so it wasn't the home run that people thought it could be, but it's still a decent return for a grocer. Amazon right now, well, the jury's out for Amazon. We'll see what happens there. The CEO and founder, the former CEO and founder, is spending his time partying in LA with fancy girls or women. But he's stepped down, so he's not really at the helm anymore. So that doesn't, you have to look at Amazon ex Jeff Bezos. Musk is in that transition. Like he instead of having parties with girls, he's just having parties with Twitter software engineers, which is fair to him. Still a better use of his time, but the point is he's not focused on what matters to us shareholders at Tesla, which is Tesla. So what's Tesla worth? I mean, the bench of Tesla is deep, but we said there could be a cultural negative influence, or maybe it could also be a reinforcement. Maybe people like Drew Ballino, I don't know, I wish I could talk to him, or Andrej Karpathy goes back and says, look, well, we're going to even be more extreme now because our founder has for some reason decided not to be involved as much anymore. We're going to carry the candle, or the whatever the word is, the relay, and we're going to push this mission of sustainable transportation, sustainable energy, and all of that stuff. I'm just about to finish my article, Fusion is Illusion, Abundant Energy is Not. What I'm trying to say in this essay, it's on Substack, is that there's absolutely no reason to believe that we can't get to a much better energy situation as a species, as an economy, as a global economy. It's certainly, the laws of physics don't prohibit it, so we can, and energy is crucial. Energy is absolutely important for growth, prosperity, upward mobility, equity, opportunity, anything you care about, wealth, right or left, it doesn't matter. Energy, without energy, nothing happens. With energy, everything is possible. Energy is not enough. Saudi Arabia has lots of access to energy, but it doesn't work. So my thesis in that article is that we need freedom and energy, and the way we get to abundant energy is going to be through entrepreneurial ingenuity and risk capital, and not through, let's say, large government projects and those sort of things. But why am I mentioning my Substack article here other than trying to plug it? Well, what I'm trying to say is, look, we need iteration, tickering. We need everything that Elon Musk stands for. We need that. Without that, nothing will happen. Nothing will change. Now, Musk might have decided not to do it. Others can pick up that. Baton. They can. It's not written in stone that Elon Musk is the only person in the world that can do this. But one thing is for sure, whoever is taking over Tesla in a sense, as a CEO officially or unofficially, it doesn't matter. Somebody has to rally the troops, inspire the troops, give people a reason to invest, give people a reason to work. You see, if you don't have a reason to invest in Tesla, well, why should somebody have a reason to work for Tesla? It's the same question. We've always said that investors in Tesla are like employees. I mean, they are, really, they are. This is not just some business school case study, blah, blah, blah. This is the real thing. This is really how we think, and this is how it is. I mean, it's not like we make this up or anything. So what I'm trying to say here, and this is really this is what I'm trying to get home in this particular episode. We as investors, we're in this as much as employees, as much as anybody else who is involved. We have to be inspired. We have to be hopeful. And right now we're not. So it's up to Elon Musk to decide what he wants to do. If he doesn't, then he should let others people do it. If he doesn't want to be involved 150% like he's always been, then he should let other people take over. Right now, he's not behind the 8 ball. Now, for us investors, as I said, we have reduced our position, but we're still invested. We have a lot of our capital in Tesla. And we will have to make hard decisions, either stay or... Right now, the way we see the market is we see a J-curve recovery. So we see another painful step down, maybe 20, 30%, and then we have a very sharp recovery. So we feel that within the next 3 to 6 months, we could be down to 80, but then back to 120. So why sell? Why pay capital gains taxes when we might be in the same position in 6 months from now? This is the way we see it. We might change that, but this is right now the conclusion. And the reason we think that Tesla is still worth an investment is that once the macro improves, the actual fundamentals of Tesla are incredibly strong. Because the thing is, what makes a company like Tesla worth investing is anti-fragility. This is the concept that we borrow from Nassim Taleb, which means that the company is going to get stronger in tough times. And this is something we need to work on right now in the next couple of weeks to understand. Is this company going to get stronger or weaker in tough times? During COVID, Tesla got stronger. During the 2009 recession, Tesla got stronger. During the 2000, well, we didn't have much recession since then in the US, but during the Chinese lockdowns, hopefully Tesla is getting out strong. Is Tesla getting out stronger out of this turmoil right now or not? And this is the work we have to do. We don't have an answer. We believe it's true. We believe Tesla will get out stronger. They have enough margin. They have enough pricing power, enough value, enough product, enough levers, demand levers, all of those things to come out stronger as a products and service company, and also as an inspiration for a whole generation of employees and investors. Thank you.